world facing an uncertain future, but Nigeria well positioned to survive, says Edun. CBN raises over 1 trillion naira in fresh open market operation auction. Oil ages up despite murky economic outlook. Potential OPEC plus supply hike. An Asia-Pacific market straight mix after China vows targeted measures to support industries. Welcome to Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's begin with the Apex Bank. The Central Bank of Nigeria, CBN, has raised a total of 1.008 trillion naira at its open market operation OMO auction. This follows an overwhelming investor demand that led to a 102% oversubscription, according to the Apex Bank data. The auction, which initially offered 500 billion naira across two maturities, attracted total bids of nearly 1.4 trillion naira. This indicates that investors sought to take advantage of high-yield government instruments amid rising inflation and expanding money supply. The move by the CBN to raise funds from OMO affirms its aggressive monetary tightening stance aimed at mopping up excess liquidity and cooling inflationary pressures that have persisted despite elevated interest rates and a record-high cash reserve ratio. Now, the Nigeria Deposit Insurance Corporation, NDIC, has started payment of 46.6 billion naira in liquidation dividends to depositors of the defunct Heritage Bank. This is contained in a statement signed by Acting Head Communication and Public Affairs, Hawa Gambo. She said the funds were released from sales of the bank's assets and recovery of debts owed, while explaining that liquidation dividend is paid to depositors of a closed bank beyond the maximum insured limit using proceeds from asset sales and debt recovery. She added that liquidation dividends may also cover payments to creditors and shareholders once all depositors have been fully reimbursed. The NDIC began payment of the first tranche of liquidation dividends on 25th April. Now, Nigerian currency has appreciated against the US dollar in the official and unofficial markets. How much is the naira exchanging for the currencies? Let's see. Minister of Finance and Coordinator Minister of the Economy, Wale Edun, and Central Bank Governor Olayemi Kaduso have emphasized Nigeria's robust policy framework combining fiscal and monetary measures to manage inflation and economic shocks effectively. This forms some of the highlights of their joint press briefing on Nigeria's participation at the 2025 IMF World Bank meeting in Washington, D.C. Lydia Samson reports.
Global economic growth is slowing sharply to 2.3% in 2025, signaling a recessionary trend driven by escalating trade tensions, policy uncertainty, and financial market volatility. Business confidence is eroding, investment is delayed, and finance costs are rising, increasing risks for developing economies and global markets alike. The Minister of Finance and Coordinating Minister of the Economy, Wale Edu, and the CBN Governor noted that coordinated actions between fiscal authorities and the central bank have been critical in anchoring market expectations and maintaining investor confidence despite persistent global uncertainties.
We have had conversations which have encouraged us in the fact that both at the World Bank and at the IMF at the highest levels, they have seen it fit to point out that Nigeria is on the right path in terms of its monetary policy, in terms of its fiscal policy.
Our delegation used the meetings as a platform to spotlight Nigeria's bold economic reforms and explore further measures to enhance macroeconomic stability, strengthen our financial system, and drive inclusive growth for all Nigerians.
Could also unveil the Nigerian Foreign Exchange Code aimed at enhancing transparency and accountability in the foreign exchange market, a key step in stabilizing the economy. The Minister of Finance underscored ongoing reforms and interventions, including support for agriculture and small businesses, which have helped cushion the impact of global disruptions on Nigeria's economy. They acknowledged the challenges posed by external shocks such as commodity price volatility and inflationary pressures, but expressed optimism about Nigeria's growth prospects due to strategic policy responses and economic diversification efforts. The briefing reaffirmed Nigeria's commitment to sustaining economic stability through prudent management and collaboration between monetary and fiscal authorities, ensuring the country navigates global headwinds with resilience and sustained investor confidence. While they emphasize the importance of domestic revenue mobilization, their optimism resonates with Chairman Senate Committee on Finance Sani Musa, who praised Nigeria's resilience amid global economic turbulence.
Now, there is an International Monetary Fund, IMF, and World Bank Group spring meetings brought to the forefront the pressing need for global cooperation in navigating an increasingly complex economic landscape. These annual meetings serve as a pivotal platform for member countries to discuss strategies to address various economic challenges, including inflation, trade imbalances, and sustainable development goals. As nations navigate the fallout from the COVID-19 pandemic, geopolitical tensions, and climate change, the focus has shifted toward fostering economic resilience and solidarity. They shed more light on the talking point at the just concluded World Bank IMF meeting we have in the House of Financial and Investment Analyst, Dr. Niya Kisiju. You're welcome as usual.
Thanks so much for having me.
Okay, beautiful. We've heard from the Minister of Finance. He said that the world face an uncertain future, but Nigeria well positioned to survive it. What do you make of that statement?
I think to a large extent, the assertion by the Honourable Minister is correct. Correct to the extent that there have been validations by different global institutions on the appropriateness of the economic reforms that the country is undergoing at the moment. That is, that Nigeria is undergoing at the moment. So either at the level of Fitch, that had also, upgraded the scale of relevance of the Nigerian economy, at the level of the World Bank, even at the level of the IMF, even if it was in direct opposition to the position of the World Bank, and so many, I think, including PwC, global PwC. So to a large extent, there is this consensus around the fact of the relevance, the appropriateness of the Nigerian economic reform. Everybody, institution also agree that to a large extent the Nigerian economy is showing resilience. And resilience is perhaps the most important value when it comes to an economy under recovery and in a growth trajectory. An economy that has resilience will most likely have capacity for adaptation. So when that economy has a capacity for adaptation, it means that when challenges, sometimes unforeseen challenges arises leading to shock, because of that capacity for adaptation, it's able to, of course, adapt to emerging possibilities and challenges, as it were.
You think the takeaways from the IMF, coupled with the fact that we have, the federal government have actually working on a reform in which we're actually seeing some of the results from the reforms. Do you think that would take us to a position where the Nigerian economy could be termed as resilient?
The agreement really is that the economy, as it were, it's on a growth trajectory, either as evidenced by the 2024 aggregate GDP growth rate, and of course, as projected, especially by the World Bank, and of course, as projected by the federal government itself and some other experts around the world. So if the GDP is a major measure of the growth of an economy and the resilience of an economy, I think to a large extent there is that global agreement that the Nigerian economy is on that trajectory. Perhaps most importantly, this meeting availed the Nigerian government to showcase its many economic reform policies, and of course to invite the world, global investors to come invest in Nigeria, especially given the fact that it's a new paradigm in the country, a paradigm of market-driven economy, which global investors understand more. We are seeing more reduction in government direct intervention, except where appropriate and strategic. And to this extent, I think I would want to personally commend the governor of the central bank by embarking on periodic intervention at times like this, knowing that sometimes you do not leave the market, the foreign exchange market, principally to the whims and caprices of the open markets. So immediately after the announcement by President Trump of his many curious tariffs, and that led to so much distortion and disturbances in the global capital markets. The CBN governor came with a series of interventions in the foreign exchange market, and that to a large extent stabilized the market.
Now there's the issue, part of what was actually discussed at the IMF is the issue of debt, rising debt. And given that session, it seems like the developing partners seems to have little appetite about debt forgiveness. But the thing here is, what practical option does Nigeria have to manage its rising debt burden?
Well, I think the last I read, and because I followed up on the position of Nigeria immediately after the debt sustainability discussion, the fact that Nigeria decided to start looking inward rather than in the global external market shows, one, the capacity of the Nigerian domestic market to provide whatever may be the need, of the capital need, or the fiscal need of the federal government or even the state government. And I think the position now is to start reducing possible acquisition of debt in the global market, or even the global capital market, or even in the global multilateral market, and to put emphasis on the Nigeria domestic market. And the capacity is huge. If you consider what we are doing along the pension fund alone, we're talking of more than 23 trillion. The Nigerian capital market, the stock exchange market, the value is more than 66 trillion naira, and you're not talking about the money markets, and you're not talking of other forms of non-financial market too. So when we take all this together, whatever may be the need, of the federal government can be provided in the domestic market. And I think from what the finance minister said, the whole idea is to make the private sector the major driver, the engine room of the economy, in such a way that the federal government's acquisition of debt in the domestic market will be led, will be driven by the private sector. And I think that is what should be the target, as it were, because it's the private sector that is able to enable the economy as much as possible and impact as many people as possible.
Okay, another issue is on climate finance and development. Nigeria stands to somehow benefit from a new $11 billion pledge for climate and development initiative. How can the government now somehow position itself to attract a fair share of this financing?
It's about being deliberate about climate sustainability, I think Nigeria historically has been playing a strong role in that sector. If you recall the recent drama in the social media, or let's say uproars in the social media, where some people believe that the intention of Aso Villa to have it powered by solar renewable energy, I think to the world of 10 billion. There was so much rancorous frenzy around that proposition, and I was like, this is the way to go, because what the government is saying is to say that we are leading, in this focus, moving away from fossil fuel use, fossil fuel driven energy production to renewable. So. If at the highest possible level of government we are having this kind of example, it also shows that there is a commitment to zero emission as proposed by Nigeria. I think was it 2018, 2019 COPs, as it were.
Okay, with the global growth now forecast downgraded due to trade tensions, what are the likely impacts on Nigeria's export-driven sectors like oil and agriculture?
Well, talking about this, it depends on where you belong. Between the two main Bretton Woods institutions divide, the World Bank and the IMF divide. Yes, there's a talk of specifically of Nigeria's growth, being more or less castrated in the consideration of the IMF, the International Monetary Fund. The International Monetary Fund is projecting that the Nigerian economy would shrink to under 2.7% by 2026. But at the same time, the IMF is the World Bank is projecting a higher possible threshold, for the Nigerian economy, looking at taking it at 3.6 and 3.8 respectively between 2025 and 2026. So it depends on where you belong to. I want to belong in the class, not just of the World Bank. I want to belong in the class of J.P. Morgan, and of course of the Nigerian federal government, which had also projected more than 4.6% GDP projection. My own school of thoughts are projecting 5.0% this year, because we believe that the main cost input into the Nigerian production threshold had been largely taken care of, either at the level of energy or at the level of food production. So we believe that going forward, most of the cost inputs into the inflation basket had been taken care of, and that the best we can see is a decline in these items.
Now, Doctor, before I let you go, just a brief one. How do you think Nigerian and African countries can build resilient economies in the face of global protectionism that we are seeing today?
We have a stronger reason to start trading amongst ourselves now. One, the Trump administration had told us now, had shown to us that we are no longer invited to the table at the global level, and that we should use our own resources and the capacity that God had given us properly in a way that we first try to understand how to depend on ourselves and how to hold ourselves through this storm, as it were, because God had provided everything that we need, to develop in Africa.
Okay, thank you very much, Nia Kisiju. It's been a pleasure having you on the program.
Thanks so much for having me.
Now, our share index rebounds strongly, gains 1.46% as consumer goods, insurance and banking sectors shine. Well, Olayinka has a report on that.
The NGX All-Share Index and market capitalization appreciated by 1.46% to close the week at 105,752.61 basis points and 66.465 trillion naira. The market opened for 4 trading days last week as the federal government of Nigeria declared Friday 18th April and Monday 21st April 2025 as public holidays to commemorate 2025 Easter celebration. Meanwhile, a total turnover of 1.854 billion shares worth 56.025 billion naira in 51,386 deals were traded by investors on the floor of the exchange. The financial services industry led the activity chart with 1.266 billion shares valued at 29.400 billion naira in 24,351 deals, contributing 68.28% and 52.48% to the total equity turnover in volume and value. The ICT industry followed with 136.707 million shares worth 12.472 billion naira in 2,974 deals, while the third place was the consumer goods industry with a turnover of 118.617 million shares worth 4.415 billion naira in 5,869 deals. Trading in the top 3 equities, namely Fidelity Bank PLC, Access Holdings PLC, and Guarantee Trust Holding Company PLC, accounted for 797.873 million shares worth 22.043 billion naira in 8,618 deals, contributing 43.03% and 39.34% to the total equity turnover in volume and value. A total of 442,959 units of exchange-traded products valued at 22.567 million naira were traded in 59 deals, while for bonds, a total of 68,561 units valued at 69.173 million naira were traded in 17 deals. On summary of price changes, 64 equities appreciated in price during the week, 27 equities depreciated in price, while 57 equities remained unchanged. Olayinka Ojo for Business Express.
And now let's join Maria Zakari for a global stocks update. Maria, is over to you.
International markets are mixed this afternoon. European markets were higher with nearly all sectors in the green as investors brace for a slew of major earnings and data releases in Europe. Germany's DAX gained 0.59%. We have the FTSE of the UK, which jumped 0.15%, and the CAC of France is up 0.88% also. Asia markets traded mixed on Monday as investors assessed China's promises to support domestic businesses as well as developments in trade negotiations between the U.S. and countries in the region. The Nikkei 225 of Japan is in green at 0.38%. We have the Shanghai Composite of China opposing this at 3,288 basis points or 0.20%. We have the Hang Seng Index of Hong Kong at 21,971 or 0.04%. Stock futures in the U.S. drift lower as traders await big tech earnings, while waiting to see progress on trade deals. The Dow is in red at 0.06%. We have S&P 500 following at 0.10%. The Nasdaq Composite was also down 0.12%. In Africa markets, numbers are mixed. We have South Africa and Namibia markets closed for national holidays, while the Nigerian index dropped 0.02%. Ghana was higher at 0.01%. That's it for Global Market today. I am Maria Aldezaka. It's back to Musa.
Well, thank you very much, Mario, for that update. Well, that concludes Business Express. Business Express returns tomorrow at 9:30 a.m. Thanks for watching. Enjoy the rest of your day.